Now, continuing the same example, you cannot say that only cloth is required in manufacturing of those products. Apart from cloth, maybe some other raw material is also required. Now, there were four products. There were four products: product A, product B, product C, and product D. Cloth is common, but maybe apart from clothes, in manufacturing of those products, thread is also required. For example, apart from cloth, thread is also required. For example, black thread, thread of black color. Black thread is required in manufacturing of product A. Do you remember product A was for business purpose? Now in this case, there is no problem in black thread. I will not apply rule 42. I will not apply rule 42 does not deal specifically for black thread in my example. Why? Because black thread is not common item. Black thread is used only in manufacturing of product A. I can easily check it. So whatever ITC is there, there is no question, there is no problem, because that entire ITC can be used for product A, utilized for product A. The problem comes only for that much of raw material which is common for taxable product, exempt product, business purpose, non-business purpose. As far as those raw materials or those inputs which are easily identifiable that these are used in manufacturing of which product, then there is no problem in calculation of that ITC. It's clear. Shall I proceed? Is the concept clear now? Now, start reading this. Now, this is the heading. So it is technical, and let us start this topic. Rule 42. Manner of determination of ITC in respect of inputs or input services. Now, one thing is missing in this heading. Which thing? Because there are three things required in manufacturing of any product. What are those three things? Input raw material, input services, and input, I can say by default, input capital goods. These three things are required in manufacturing of any product, any finished product. Rule 42 only deals with first two. First two means what? Input raw materials and input services. We don't use the word raw material, we only use the word input. Now, how to apportion capital goods? For this, I have separate rule. Rule 43. Rule 43 deals with apportionment of capital goods. And rule 42 deals with the apportionment of input and input services. Now, let me start this rule 42. You can see this rule 43 on rule 42 on the website also, CBIC. You can see rule 42. We will discuss this rule 42, but in a simplified language. It is my rule 42, which is mentioned in the rules. And you can see so many figures here. T1, T2, T3, C1 is equal to T minus T1, T2, T3, T4. Okay, C2, D1, E, F, C2. So it is a little bit technical. And it's lengthy also. Okay, this is entire rule 42. Now come back to that simplified file. Now see this rule 42. Step 1. Now step 1 is computation of common ITC. I told you in my example that cloth was common raw material which is used to manufacture product A, B, C, D. But black thread was not common. Black thread was used exclusively in manufacturing of which product? Product A. My step 1 doesn't deal with that black thread. My step 1 deals with what? That common cloth. I hope my point is clear. If still not clear, you first listen to me for 10 to 15 minutes and then you ask me the doubt. Now see step 1. How do you compute that cloth in my example? How do you compute common ITC? So from which point I will start? Step 1. Step 1 is what? Computation of common ITC. Now T is the starting point. The total input tax involved. Now when I purchase the raw material, I know that how much tax I have paid. So that I easily know from my invoice. Now from that invoice, I will start removing those which are ineligible. That's it. Now T is the total tax which I have paid to my supplier. From this, what I will first deduct exclusively for non-business purpose. If that cloth, in my example, I purchased a cloth of 10 lakh rupees and I paid 1,80,000 as tax. So 180 is my T in this example. And from 180, I have to deduct that much which is easily identifiable. So the word relevant is what? Exclusive. You cannot afford to miss this point. Exclusively for non-business. That is T1. Ignore it. Then you deduct what? That much exclusively for exempt supplies. Because these two, T1 and T2 are ineligible. I cannot claim ITC for that product or for that service which is for non-business purpose and which are exempt. I can claim only for what? Which are taxable and which are for business purpose. So in T1 and T2, these two refers to what? That first you remove those which are ineligible and which are easily identifiable. So in T1 means what? Exclusively for non-business, and T2 is that much of ITC which is exclusively for exempt supplies. Now T3 is also ineligible. Now T3 is a separate point. It says what is my T3? We have not yet read section 17 subsection 5. Section 17(5) clearly tells me those items on which you cannot claim ITC even if these are used for business purpose and even if these are for taxable supplies. Okay, so section 17(5), the heading of 17(5) is blocked credit. Even if you use some goods or services for business purpose taxable, still these are banned under section 17(5). So what T3 says in this rule 42, that you remove those ITCs which are altogether ineligible. And the remaining is what? ITC. This is known as C1. The remaining is that ITC which I can show in my electronic credit ledger. What do I mean by electronic credit ledger? That I have a right, or I want to say that I have this right, this much of right of ITC which I can show, but government will still rectify it. but I cannot show T in my electronic credit ledger. That means 1,80,000 cannot be shown in electronic credit ledger. First, from 1,80,000, you have to clearly remove T1, which is exclusively for non-business supply, T2, which is exclusively for exempt supply, T3, which is altogether banned under section 17.5. So that difference C1 is the amount which I can show in my electronic credit ledger. But still I have to remove so many things from this. Now from C1, what you should remove? Exclusively for taxable supply. That is known as T4. Now there should not be any confusion that why I am removing T4, because ITCs for taxable supplies are eligible. Of course, I know that ITC for taxable supplies are eligible, but right now the purpose of removing here is what? Because my concentration is on that common, which is to be apportioned. I am removing T4 here, but you cannot say that T4 is an ineligible ITC. It will be eligible. But for the time being, my purpose is not to compute eligible ITC. The heading of my step 1 is what? Not eligible ITC. The heading of step 1 is how do I compute common ITC, from which further segregation or separation will go on. So this is my common ITC. It is C1 minus T4. Please do remember that T4 is eligible ITC. I can claim T4 as my ITC, but right now my purpose is not to compute eligible ITC. My purpose is to compute, in my example, that cloth, how much is common. Now this C2 is known as step 1, common ITC. There may be still some confusion, but you please, what I am teaching you for the timing, you for next 5 to 10 minutes, you simply understand it. I'm discussing with you rule 42, which tells me the manner of computing eligible ITC for input and input services. But to reach at eligible ITC, there are 5 steps to be followed. What is my first step? Compute common ITC. How do I start compute common ITC? I start with the total ITC or total tax which I have paid. From this, I deduct 3 items first. First item was exclusively for non-business purpose. My second item was tax which I have paid exclusively for exempt supply. My third item was tax which I have paid, but on which tax is not allowed to be claimed as ITC as per section 17.5. When I remove these 3 from the total tax paid to my supplier, I get C1. From this, I deduct that much of tax which I paid exclusively for making my taxable supplies. That is known as T4. Difference C1 minus T4 is known as C2. T4 is eligible ITC, but C2 is not 100% eligible ITC. I have to further refine my C2. Now, understand it with the help of this example. Let us assume that slippers are exempt. Let us assume that slippers are exempt from GST. Now suppose Radhika Footwear Limited manufactures 2 varieties of slippers. Now both these slippers are tax free, and I am a manufacturer of footwear, shoes and slippers, etc. So I manufacture 2 varieties of slippers and 5 varieties of shoes. So there are 7 products which I manufacture. 2 slippers, 5 shoes. Both the slippers are tax free because the example says that both the slippers are exempt from tax. Dye for different colors are used in the manufacturing of all footwear, that is slippers and shoes. So how do I manufacture these slippers and shoes? I have to use some dye. Okay, some dye, some machinery you can say, or some tool you can say, which are of fixed size, etc., and of different colors. But out of those different colors, some are exclusive colors, bright pink. It is used in manufacturing of one slipper, for one of this slipper. I'm not concerned with this one of the slipper. I know that slippers are tax free. Now this is exclusively for exempt. So do you remember it is T1, T2 or T3? Do you remember it is T1, T2 or T3? It is T3. Sorry, it is T2. Whatever tax I have paid in purchasing this bright pink dye, I cannot claim this as ITC. Is it clear? Okay. Then what? Another special ink, black ink. Black color is used only for the shoes. I don't know which shoe, but shoes are taxable. But it is also what? Exclusive. It is exclusively for what? For taxable product. So do you remember what is this? It is which? It is T4. Clear? I have to remove this also, but still it is eligible ITC. I will add it later on, but for the purpose of computing step 1, I have to remove this because it is exclusively for taxable product. Blue and yellow. Now so we have this problem in these two colors. Blue and yellow are used for all the varieties. So how many varieties? How many varieties? Total 7 varieties. 2 slippers and 5 shoes. Now the problem is this blue and yellow color. Whatever tax I have paid in purchasing this blue and yellow color, the total tax is not the eligible ITC. Because I'm using these 2 colors for some exempt products like slippers. So I need to separate it. Brown is used for which purpose? It is also very easy. It is exclusively for non-business. So do you remember that brown is denoted by what? This brown is exclusively for non-business. That means it is my what? It is T1. So in this example, I have used 3 things. We have T1, T2 and T4. Now let me show you this screen further with some assumed figures. So these are some assumed figures to make sure that you know the structure of common ITC. Now these all figures are assumed amounts. Okay, so there should not be any question that from where I got it. These are assumed figures. For example, I made a total purchase of 255. This is the total purchase. First, I will deduct the tax which I paid for brown ink, brown color, brown dye. Brown is for non-business. It was my T1, 10,000. Then I deducted my T2, bright pink dye, exempt supply 90. There is no T3 in my example. 155 I will show in my electronic credit ledger, and I will deduct what? T4, taxable supplies, black dye, 40. Do remember again that this 40 is still eligible. I can claim 40,000 as credit, but right now my purpose is not to compute eligible credit. My purpose is to compute common credit. Now 115, it is these two dice which are common, blue and yellow dice. And this is my step 1. If you have any doubt till this calculation 1,15,000, you tell me. Is this calculation of 1,15,000 clear? Any doubt in this calculation of 1,15,000, how I have arrived at 1,15,000? All the figures are assumed figures. T minus T1 minus Q2 minus T3 will give you C1. C1 minus T4 will give you C2. Okay, now step 2. Now entire issue is in this 1 lakh. It is technical only. Entire problem or is in apportioning of this C2, that is 1,15,000 in my example. Now let us proceed with step 2. Now what step 2 says? Compute ineligible credit. Now which are ineligible credit by default? Every exempt supply is an ineligible credit. Every non-business supply is ineligible credit. Taxable supply eligible and business supply eligible. Now this ineligible, it is only for which supply? Exempt supply. Now do remember that already I know how much is ineligible under exempt supply. 90 is of course ineligible. But my step 2 doesn't talk about total ineligible for exempt supply. It only talks about that from this 1,15,000, how much is ineligible for exempt supply. Now how much is ineligible? So this is the formula given as per the rules. That your D1 is equal to E by F multiplied by C2. Now D1 is what? Ineligible ITC. What do I mean by ineligible? For exempt supply. C2 is what? That common ITC. And E is what? Now I divide this 1,15,000 on the basis of my turnover. How much was exempt turnover? How much is total turnover? That's it. On this basis, proportionately, I get my on an average exempt ITC. ITC for exempt supplies. E is what? Aggregate value of exempt supply during the tax period. And F is what? Total turnover in this state. In this state, for one state of the registered person during the tax period. That's it. So on this basis, I will get on an average that out of 1,15,000, how much should be logically apportioned for exempt supplies made per month. I'm assuming that this tax period is of per month. In case of composition, the tax period is quarterly, but for all other people, tax period is per month. Now see this example. Continuing the same example. Now there are some calculations given that how do you compute aggregate value, etc. For this, we have to refer the notes or for any material what you are referring. I'm not discussing those. What should be included in exempt supply, what exempt supply does not include, that you have to read yourself. Now see this illustration. This is the illustration. Let us continue the above illustration with the assumption that Radhika Footwear Limited has the following turnover in October. So October is my tax period per month. October is the tax period. Turnover of both the varieties of slippers. Both are exempt and the total turnover is 3 crore. Then turnover of all 5 varieties of shoes, taxable product, total 2 crore. So how much is the total turnover? 3 plus 2, 5 crore. How much is the exempt turnover? Slippers, 3 crore. So 1,15,000 multiplied by 3 by 5. So on an average, 1,15,000 multiplied by 3 crore divided by 5 crore. On an average, out of rupees 1,15,000, 69,000 should be for exempt supply, which is ineligible. This is my step 2. Any doubt in step 2? Okay, now next step. I do not have ineligible ITC for exempt. For non-business purpose also, the ITC is ineligible. So next, step 3. This is also ineligible, but this ineligible is not for exempt, it is for non-business portion. And again, the rule says that on an average, you assume that when you are a businessman, it's not that 50% you will consume personally. So on an average, rationally, they have given only 5% of the total ITC for non-business and remaining is for business. Because as a businessman, normally you don't consume personally. So still 5% is maximum, you can say. Now, how much is ineligible on account of non-business? Rationally, we assume that out of the total purchase, only 5% I will use for personal purpose, remaining I will do my business. So whatever is C2 into 5% is what? Ineligible only for non-business purpose. So in my example, out of 1,15,000 into 5%, 5750 is also ineligible because of non-business supply. Step 3. And what is step 4? Then how much is eligible from that common 1,15,000? Out of this 1,15,000, how much is ineligible? 69,000 we have computed because of exempt. 5750 we have computed because of non-business. So remaining is obviously what? Eligible. So C3 is the final figure. C2 minus D1 minus D2. So 1,15,000 minus 69 minus 5750. It is the eligible ITC. It is eligible common one. Out of that common, it is eligible. But other than this 40,250, it is common one. But I have some exclusive also which is eligible, and that was this 40,000. It is also eligible. But my purpose of rule 42 is not to discuss the total eligible ITC. It is to discuss basically eligible ITC, how to compute from that common stock. So that is why this rule 42 doesn't talk about this 40,000. It says that out of this common 1,15,000, your eligible ITC comes out to be 40,250. So I cannot use 1,15,000 as my ITC. I have to use 40,250 as eligible ITC. Now see this step 3 again. Before step 3, you must remember that 115 is my common ITC. That means 115 includes that common material which is used in manufacturing in manufacturing the product which is taxable, in manufacturing the product which is exempt, is used in manufacturing the product which is for non-business purpose. It is used in manufacturing the product which is for business purpose. How much is eligible out of this 1,15,000? Only that much portion which is for business and taxable. That means I need to remove two things, which is non-business and which is exempt. In next step, I have removed exempt on the basis of this formula. And in the step 3, I have removed what? Non-business. So non-business is given flat 5% of the common ITC. That's it. 5% लेंगे जब कुछ non-business के लिए 20,000 is the correct answer. You can see the solution. It is very easy. It was very easy question. Okay, now see the solution. You can click the photograph of this example, because when I move the screen upward, it will not be visible. Okay, now let me start with rule 43. Now see this rule 43. Now see this rule 43 next. It is also a technical rule. Now rule 42 talks about apportionment of ITC in case of input and input services. And rule 43 talks about apportionment of ITC in case of capital goods for machines. Now here also the same problem can come. A machine can manufacture taxable product, a machine can manufacture exempt product, a machine can manufacture a product which is for business use, a machine can manufacture a product which is for non-business use. So here also the concept is same, calculation may be different. Here also I need to check that out of that common stock or common ITC how much is eligible. Now the steps are different. Now what is my step 1 in rule 43, and rule 43 is applicable only in case of capital goods. Here also the heading is same, that how will I compute my common ITC. But here the steps are different. Now first step is what? Within first step, what is my first point? Exclusively for non-business supplies or for exempt supplies. Now what it says, if you can easily identify that much of ITC which is exclusively for ineligible items, ineligible means for non-business supply and means for exempt supply, then you have no right to show it as electronic credit in electronic credit ledger. Of course I know it, because if something is ineligible, that should not be reflected in my credit. This is the first step, first point, that simply identify it and do not credit it to your electronic credit ledger because these are ineligible. Now this is these are the steps to arrive at common ITC. First, identify those which are exclusively for exempt supply and which are exclusively for non-business supply. Now within first step, second point, which are exclusively for taxable supplies. These must be credited in your electronic credit ledger. Exclusively for taxable supply, credit in your electronic credit ledger. This is step 2. Now third, within step 2, third point, all those taxes which are not covered under point 1 and 2 above. So what is covered in my point 1? Step 1.1, exempt supply and non-business. What is covered in second point? Taxable supply. So in point 3, what is not covered? Of course, those capital goods which are used common, because in both the steps above the word used was exclusively. Now this point 3 talks about that if something is not exclusively, that means everything is what? Common. So common for taxable as well as exempt. Common for business as well as non-business. These has to be credited in your credit ledger. And this amount is denoted by TC. TC means capital, C means capital goods. I am computing the manner of, I'm revising rule 43, which talks about the manner of apportioning capital goods ITC. My first step is what? Common ITC. How I have arrived at common ITC? Within first step, first point, first you separate exclusively for non-business purpose, exclusively for exempt supply. First step, second point, separate exclusively for taxable supplies. And third is what? Now what is remaining? If I have removed everything exclusive, then what is remaining? Common. Common for business as well as non-business, common for taxable as well as exempt. This is the common, and this is denoted by TC. But capital goods are not allowed only in one tax period. That means it is not allowed in 1 month, because these are heavy machines. So the life is taken as 5 years. And if my tax period is 1 month, then in 5 years, how many tax periods I have? Then I will be having 60 tax periods. 1 month, per year 12 months, 5 years 60. This is my step 1. Now this is known as common credit, that you divide that common credit in 60 installments, and your 1 monthly installment is TM, denoted by TM. It is your common. Now you don't have only one machinery, you may be having hundreds of machinery in your factory. So what you do? TR. This is third step. TR. TR means TM per machine plus TM for all the machines. So for all the machines, all the capital goods, whatever credit you have on in for that month, do the total. That is known as TR. And final, from this common, I will remove what? Exempt supply. And that is again same formula. E by F, exempt turnover divided by total turnover multiplied by TR. This is your ineligible credit of capital goods. Now in this case, in case of capital goods, I have not deducted common for non-business purpose. If you remember what we are doing in this capital goods, just like in rule 42, what we have deducted? We have deducted exclusively for exempt product. We have deducted exclusively for non-business purpose. We have deducted section 17 subsection 5 block credits. Then we have deducted exclusively for taxable supplies. Here also we have done the same thing. The manner is different. We have deducted exclusively for non-business and exempt supply. There is no section 17 subsection 5 role here in case of capital goods. This you will get to know when you read section 17.5. We have deducted exclusively for taxable supply. Now this exclusively for taxable supply was T4 in rule 42. This exclusively for non-business and exempt supply were T1 and T2 in rule 42. T3, which is section 17.5, is not relevant here. So whatever is this third point here, it is nothing but C2. If you remember rule 42, it was my common credit. Here the common credit is divided in 60 installments, 60 months. In rule 42, we deducted 5% for non-business purpose, and for exempt we have computed by the same formula, exempt turnover divided by total turnover multiplied by common credit. Here also for exempt we have the same formula, exempt turnover divided by total turnover multiplied by common credit. But here we assume that in case of machine everything is for business purpose, so it is beneficial for the assessee. Here the department says that in case of capital goods we normally assume that 5% we will not devote toward non-business, even if you are doing something for non-business, but we assume that everything is for business purpose. This is the point in rule 43. That's it. Rule 43 is over. It is technical, not given in any book of the commoners. Okay, now let us discuss section 17, subsection 5, blocked credit. Let me discuss. It is also interesting point and very relevant. Blocked credits. Now you can read these first 2 or 3 lines. Credit of input tax paid on almost every input services and capital goods used for the supply of taxable goods or taxable services or both for business purposes allowed, except in case of some items mentioned below. In the following cases, ITC is never allowed even if these items are used for business purpose and for taxable supply. Otherwise, normally we know that as per section 17 subsection 1 and section 17 subsection 2, ITC is allowed only for what purpose? Business purpose, taxable supply. But under section 17.5, which is a special section of blocked credit, even if you are using the items for business purpose and taxable supply, you cannot claim ITC. And if you remember, we have already discussed section 16. That my third topic was what in section 16? Cases when ITC is not available. So in section 16 also there were 4 situations where ITC is not available. In section 17 subsection 5 also there are around 12 to 13 points where ITC is not available. Is the concept clear that what we are going to discuss? Clear that what we will be discussing now? Okay, let us have 2 minutes break. Okay, let us start with section 5, 17.5. Now you have to remember these items in which ITC is never allowed, even if you are using these items for business purpose and for taxable supplies. Now, what is the first heading? Motor vehicles for transportation of passengers having approved sitting capacity of not more than 13 persons, including the driver. In these cases, if you have taken this motor vehicle, suppose I want to go for some tourism purpose in Manali or Himachal Pradesh, and I have hired a motor vehicle for transportation of passengers. I'm availing the services of that transporter. I will pay some tax for services taken. I cannot claim that tax paid as ITC. This is this point. I cannot claim ITC in case of motor vehicles if I have availed the services of that transporter for transportation of passengers having approved sitting capacity of not more than 13%. But there are some exceptions. In some cases, it is allowed. So you can say that 17.5 is not a blanket point. Even though 17.5 discusses some headings where ITC is not allowed, but it gives some exceptions also that some cases may be allowed as ITC. So what is the exception? If this motor vehicle is used for doing the following taxable supplies, not exempt supply, taxable supply. If this motor vehicle is used for what purpose by me, that I will further supply this vehicle, I purchase this motor vehicle and I sell it further, then I can claim ITC, there is no problem. If it is used for transportation of passengers, then also it is allowed, provided the heading says taxable supplies. So for taxable transportation of passengers, ITC is allowed. If this vehicle is used by me, suppose I'm in training of drivers. There are so many driving license institutes who train the drivers. If I want to learn how to drive a car, I can join any driving training school. So if this vehicle is used to impart training on driving this vehicle, then also ITC is allowed. Now this point may not have been understood by you, so you understand it with the help of these illustrations. First illustration, and you have to try to tell me the answer yourself. Now see first illustration. This is first. A Limited has purchased a car having seating capacity of 5 people, including the driver, for the purpose of official use of chairman. I purchased a vehicle as A Limited and it will be used by my chairman. Is ITC allowed? Suppose I have purchased this car for 10 lakh rupees and tax paid is 1,80,000. Can I claim as A Limited? Can I claim 1,80,000 as credit? Answer is no, as per section 17, subsection 5.1. But I cannot simply decide the answer is no, because I have to read the exception also. These are the 3 exceptions. Is this car used for further sale? Answer is no. Is this car used for transportation of passenger? Now you cannot say that chairman is the passenger, because the heading of this says taxable supply. Use for chairman is not a taxable supply. So second B point is also not satisfied, and it is not for training. So can I say that ITC paid or tax paid on purchase of this car is not allowed? This is illustration 1. Is illustration 1 clear? Hurry up, reply. Is illustration 1 clear? If not clear, you read it. Now see the second illustration then, and now you try to tell me the answer yourself. Now can you tell me the answer of second illustration? B Limited, a company engaged in purchase and selling car, has purchased a car having sitting capacity of 5 people, including driver, for the purpose of further sale of this vehicle. Is ITC allowed on purchase of this car? is tax paid on purchase of this car, can B Limited claim the ITC of that tax paid? What is the answer of illustration 2? Yes, it's allowed. Why? Because of this point. In illustration 2, my answer is yes, because of this point. Yes. Point A. Because of point A. Point A. Allowed. Now, third illustration. Tell me the answer of third illustration. Hurry up, within 1 minute, you should tell me the answer. Third illustration. Transporting passengers. Allowed, yes. For transporting passenger, it is allowed because of point B. Yes, allowed. D. Tell me the answer of fourth illustration. Tell me the answer of fourth illustration. Fourth illustration. Fourth illustration allowed because for imparting training on driving such vehicle. So answer of fourth illustration is point C. Fifth illustration. Tell me the answer of fifth illustration. Fifth illustration. What is the answer of fifth illustration? Fifth illustration answer is allowed. Why? Allowed why in fifth? Why it is allowed in fifth illustration? Yes. Yes. Not allowed for that vehicle whose capacity does not exceed 13 passengers. But in this case, the capacity was 40 people, so it is allowed, even if it is for my official use. Now, last, sixth illustration. Sixth illustration, answer of sixth illustration. What is the answer of sixth? Allowed or not? Sixth illustration, answer allowed or not? Hurry up. Sixth illustration, answer allowed or not? Jaldi batao. Yes, so your first point is clear. Now, second point. Shall I proceed on second point? All clear? Now, second point, vessels and aircrafts. Above was motor vehicles of not more than 13%. Now, below second point is for vessels and aircraft. Here also vessel and aircraft whatever tax you pay to purchase an aircraft or ship, you cannot claim ITC. But again, there are some exceptions. Same exceptions which are applicable above. Same exception. Same exception. If you are using the vehicles for the following taxable supply, so same exception. Further supply of these vehicles, transportation of passengers, and training on navigating such vehicles or training on flying aircraft. And if you have used these vessels and aircraft for transportation of goods, then also ITC is allowed. There is no problem. Clear? Now, can you tell me the answer of illustration number 3? Can you tell me the answer of illustration number 3? Illustration number 3. Can you tell me the answer of illustration number 3? Illustration number 3. Illustration number 3. Illustration number 3 for vessel and aircraft. ITC allowed or not? A company C Limited, which is engaged in transportation of passengers, has purchased an aircraft. For example, ITC allowed or not? Allowed. Yes. Yes. Good. It's no. There is no problem. Clear. Illustration number 5. Tell me the answer of illustration 5. Illustration 5. Allowed. Yes. Clear. Illustration 5. No problem. Allowed. Illustration number 6. Allowed. Yes. So we have covered 2 points. Now third. Third is little bit confusing but easy. Now, what is third point? My first point is when I am paying any tax for purchasing a motor vehicle for transportation of passengers having not more than 13 people capacity. My second point was purchasing vessels or aircraft. Now, third point is related to first and second. When I purchase motor vehicle, when I purchase vessel, when I purchase aircraft, I will purchase some other services also. For example, I have to purchase some general insurance on those vessels. I will go for servicing, repair, maintenance, etc. So my third point is related to some services related to vehicles, vessels or aircraft which are used in point 1 and 2. Answer is ITC is not allowed. When in point 1 and 2 ITC is not allowed, so there is no question of giving ITC for those taxes paid on availing some services on these vessels and aircraft. But again, since there were some exceptions in point 1 and 2, there are some exceptions in point 3 also. So the exceptions are same which are written in point 1 and 2. If that motor vehicle is for supply of vehicles, transporting passenger, imparting training, then ITC was allowed to purchase the vehicle. Similarly, if I avail some insurance of that vehicle, then ITC is also allowed. In vessel and aircraft also, ITC was allowed in some cases. So for those cases, if I take service, repair, maintenance, ITC is also allowed. So same thing. Point 4 and 5 are new. You read this point and 4 and 5 yourself, then I will give you the illustration. Hurry up, read point 4 and 5 yourself, then I will give you the illustration. When insurance service is availed by whom? Not purchaser of vehicle, but by whom? Manufacturer of vehicle. For example, Maruti in Gurgaon. if Maruti Industries avails some insurance services, Maruti is manufacturer of Maruti cars, sitting capacity not more than 13. Maruti can claim ITC, there is no problem. This is my point 4. My point 5 is what? Now, so many insurance companies, for example, I have a motor car having 6% sitting capacity, and I'm in transport sector. I'm using this motor car for transportation of passengers, so I can claim ITC, there is no problem. Now I want to take some insurance, and insurance is of 20,000 rupees. I have to pay some GST also. I have taken the insurance from X Limited. X Limited has given me the insurance, but X Limited has further taken the insurance from Y Limited. It is allowed under in the business and empire. In the business sector, it is allowed. It's not that you have to give this service. If I have contacted you for some service, I know you, but you may contact another person for giving the same service to me. I will sue you in case you do not fulfill your service, and you will sue that another company. This is point 5. It is technical, but read it. When such services are received by a taxable person engaged in the supply of insurance services, that's it. So if not clear, you tell me the answer of this illustration. Tell me the answer of first illustration. Answer of first illustration. Not allowed. Okay. Now answer of second illustration. Tell me the answer of second illustration. Yes, because of further supply, in second case also ITC is allowed. Third illustration. Allowed, yes. Fourth illustration. Fourth illustration. Fourth illustration allowed because I am a manufacturer. And fifth and last illustration of this topic, third point, fifth illustration. Fifth illustration. Yes. Now this was my third point. Fourth point. Now see the fourth case when ITC is not allowed. I'm leaving this fourth point for your self-study. Okay, you can understand now this fourth point yourself. It is for self-study. Leasing of aircraft, again self-study. Now let us come directly to sixth point. Supply of following food or supply of following goods or services or both. Supply of following goods or services or both. Again, ITC is not allowed. So let us see 6A. Let us see 6A. If I am a supplier of these services, I cannot claim ITC. Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance, I cannot claim ITC. But again, there are some exceptions. So what is first exception? If I am a recipient of these services, and if I am a recipient for making further supply, then there is no problem. Because then I am a businessman. If I am a recipient of these services to make sure that what I do, that I will do what? Outward supply, then government says there is no problem. Now you can claim ITC because then you act as a middleman or businessman. Second, if because of some legal laws it is obligation on the employer to provide the same services to the employees, then also government says ITC is allowed, otherwise not allowed. So only in two cases, food and beverages, plastic surgery, etc. allowed. If as a recipient I will further supply these to some third party, or as an employer, it is my legal obligation to provide these services to my employees. Only in these two cases allowed, otherwise not. So tell me the answer of illustration 1. Illustration 1 answer. Illustration 1 answer. Yes. Not allowed by. Not allowed by. Not allowed by. Yes. Good. Now second illustration. Second answer of second illustration. Second illustration. Yes, allowed further outward supply. Yes. Good. Now this is following supply going on, and we have discussed only first one, not second. Now remaining is only for theoretical purpose. Membership of club, health and fitness center. If I join a gym and paying monthly fees of 1000 and suppose GST is 18%, so I'm paying 180 as tax on this gym service, health service, fitness service. I cannot claim this 180 as ITC, but there are some exceptions. Only when it is the obligation of the employer, only then it is allowed, otherwise not. What is the answer of this illustration? What is the answer of this illustration? What is the answer of this illustration and why? Why? It is not allowed, yes, but why? Yes, it is not the obligation. It was my own wish. K Limited itself wanted to give some gym services to the employees, but legally it was not necessary, so it is not allowed. Good point. Next point, travel benefits extended to employees on vacation, LTC, etc. Not allowed, except when it is obligation. Seventh point. Now hurry up. See this seventh point. It is technical. Not technical, interesting. Works contract services. Now in case of works contract services, when the work contract service is supplied for constructing an immovable property, ITC is not allowed. Suppose I want to construct my flat and I have hired a contractor who will build the flat for me. To that contractor, I will pay both the things. I will pay the contractor will give me both the services. Cement, iron, goods as well as labor also. But if you remember your supply chapter, work contract service is treated as supply of service, not goods, even though goods are involved, but work contract service is treated as 100% service. When work contract service is given to supply an immovable property, RTC is not allowed. But again, there are some exceptions. First exception, when this supply is for further supply, then ITC is allowed. Suppose I have given a contract to Mr. X to construct a flat for me. Mr. X has given a contract to Mr. Y. Now Mr. X can claim ITC, I cannot claim. Because in case of Mr. X, he has given the contract to Mr. Y. So whatever Mr. X will give to Mr. Y as tax, he can claim as ITC. Because for Mr. X, it is further supply to me. But I cannot claim ITC for the tax paid to Mr. X. This is my first exception. And what is my second exception? When the property is not the immovable property, is not the house, not the land or building, it is what? Plant and machinery, then also you can claim ITC. Now we are not studying Income Tax Act where immovable property is only land or building. For our GST law purpose, maybe immovable property includes plant and machinery also, then it is allowed. Second, now I am using the word construction here, but construction doesn't mean new construction. Construction includes what? Construction includes what? Reconstruction, renewal, addition, alteration, anything. And only to what extent? To the extent of capitalization. Now it is a technical point. If I have constructed something and if I have shown that construction cost in my P&L account, then it is not covered in this seventh disallowed point. What is the seventh point concept? Work contract when supplied for construction. And construction means which construction? Which is capitalized, not revenue nature construction. If I have spent something for revenue nature construction, then it is not covered here. That means ITC is allowed. ITC is only not allowed only for which construction? Capitalized construction. This is your first note which you should remember. I will show you some illustrations. And now what do you mean by plant and machinery? What do you mean by plant and machinery? It means that plant and machinery which is fixed to earth by foundation. There are so many machineries which are not moved easily from one place to another. You have to build a concrete structure, lintel, iron, cement. And for further supply, outward supply of goods or services. When you install those machineries, production starts coming then. So plant and machinery doesn't include only a machine. It includes even that structure which is necessary so that machine can start work. But plant and machinery does not include these 3 points. It does not include land, building or civil structure. Okay, this point is technical. 7th point is technical. It does not include telecommunication tower. And it does not include pipelines. So you should click the photo of this 7th point and I will show you now illustration. So you please click the photo of 7th point because You will not remember this 7th point when you will attempt the illustration. So click the photo of 7th point and then I will give you the illustration. Have you clicked the photo of 7th point? Have you clicked the photo of 7th point? Okay, now you tell me the answer of first illustration. Tell me the answer of first illustration. First illustration. Yes, allowed because it is further supply. Yes, good point. First illustration is clear. Further supply. Second illustration. Think and then give the answer. Second illustration. Second illustration. Read the answer of second illustration. Read the answer of second illustration. If you have doubt, then you ask me. Read the answer of second illustration. If you have any doubt, you ask me. Shall I proceed? Capitalize not allowed. Value nature allowed. Third answer. Third point. Answer of third point. Third point. Yes, because it is for plant and machinery. Okay, yes, because it is for plant and machinery. Fourth answer. Answer of fourth point. although it is plant and machinery, yes. Fifth point, fifth point, fifth illustration, fifth illustration.